The Brexit is something that we've been calling as something that's more likely than not, as far as where the market is pricing it in. Unfortunately, the things behind the Brexit are not going away anytime soon. The concerns around trade, the concerns around immigration, the concerns around income inequality, the concerns around overregulation, all of those things are what's driving Trump. They're driving the Brexit. These things aren't going away anytime soon. If you play it forward from here, we see that it is more impactful within the currency markets and within the global growth dynamic, as opposed to really betting too much on this one vote, which is really hard to call. But I think the overarching principles and this idea of, where is global growth going because of these concerns, and that's fairly negative, right? So we're going to see some slowdown as these economies focus more on protectionism as opposed to globalization, which we know is actually a very positive dynamic. So yeah, I think what's important is to look beyond the Brexit, to think of the underlying forces that are driving this, Martin. And obviously, there's going to be some big moves that these movements create. And I think that the greatest place to look there is in the currency markets.
Yeah, I was going to say that. I mean, everything you've talked about sounds like it's going to be bearish for dollar.
Well, it can be, a very bearish period. What the dollar is most sensitive to, right, is global growth, as opposed to a lot of people believe that rate differentials are going to drive the dollar. We really see that if growth picks back up, we're going to have the dollar weaken. That would be a very strong dynamic. However, to the extent you get a Brexit, the pound is going to get hit hard. The euro will get hit hard, and the dollar will rise. That's going to be a very negative dynamic for stocks. I mean, if you look at the S&P, the S&P needs something that's going to change the dialogue right now. The dialogue today is that we're at very high multiples. We have earnings that are challenged, and without a change in that move of the dollar, which has been in this band, right, between 93 and 100 on the DXY, unless we break out of that band, we're not going to change the dynamics for what the stock market's going to do from here. And that means that the market's going to have a lot of headwinds. It's not going to go anywhere. If we saw the dollar break out of this band, let's say get to 92, 90, et cetera, I would think that would be a very positive move for stocks. But the base case for us, I think, is we'll see some more dollar strength because of the slowdown that we're seeing because of things like the Brexit.